What if I told you that you could buy an investment property without showing a single pay stub, without proving your income, and without a traditional job? Sounds too good to be true, right? Well, it's not. And today I'm going to show you exactly how to do it using something called a DSCR loan, one of the most powerful tools available to real estate investors right now. Stay with me, because by the end of this video, you'll know exactly how these loans work, who qualifies, and the step-by-step process to get one. Let's get into it. What is a DSCR loan? First things first, what exactly is a DSCR loan? DSCR stands for Debt Service Coverage Ratio. It's a type of mortgage designed specifically for real estate investors. Here's the key difference from a regular loan. Traditional lenders look at your income to decide if you qualify. A DSCR loan looks at the property's income instead. In other words, the lender asks one simple question: does this property make enough money to cover its own mortgage payment? If the answer is yes, you're in business. This makes DSCR loans perfect for self-employed investors, landlords with multiple properties, or anyone whose personal income looks complicated on paper. How is DSCR calculated? Now, let's talk about the math. Don't worry, it's simple. The DSCR ratio is calculated by dividing the property's monthly rental income by its monthly debt obligations, meaning the mortgage payment, taxes, insurance, and any HOA fees. So if a property brings in $2,000 per month in rent, and the total monthly debt payment is $1,600, your DSCR is 1.25. Most lenders want to see a DSCR of 1.0 or higher. A ratio of 1.0 means the property exactly breaks even. Anything above 1.0 means it's cash flow positive. Some lenders will go as low as 0.75 but expect higher rates. The higher your DSCR, the better your loan terms will be. Who qualifies? Here's what most lenders typically require for a DSCR loan: a credit score of at least 620, though 680 or higher gets you much better rates. A down payment of 20 to 25%. These are investment property loans, so you won't get away with 3% down. The property must be an investment property, not your primary residence. This includes single-family homes, multifamily up to 4 units, short-term rentals, and sometimes condos. And that's basically it. No W-2s, no tax returns, no employment verification. Property does the talking. Step-by-step process. So, how do you actually get one? Here's the process broken down. Step 1, find the right property. Before you apply for anything, you need a property that makes sense on paper. Run the numbers first. Look at comparable rents in the area, estimate your expenses, and make sure the DSCR works in your favor. Step 2, find a DSCR lender. Not every bank offers these loans. You'll mostly find them through mortgage brokers, private lenders, or specialty investment property lenders. Search specifically for DSCR loan lenders in your state. Step 3, get pre-qualified. Submit basic information: your credit score, the property address, estimated rental income, and your down payment amount. The lender will run a quick analysis to see if the deal works. Step 4, property appraisal. The lender will order an appraisal that includes a rent schedule. This is called a 1007 rent appraisal. It confirms both the property value and the market rent, which is what the lender uses to calculate your DSCR. Step 5, underwriting. The lender reviews everything: the appraisal, your credit, the property details. Since there's no income verification, this process is usually faster than a conventional loan. Step 6, close the deal. Once approved, you close just like any other mortgage. Sign the documents, wire your down payment, and you're officially a property owner. Pros and cons. Quick and honest breakdown. The pros: no income documentation needed, faster closing times. You can scale and buy multiple properties. Works great for short-term rentals like Airbnb. The cons: higher interest rates than conventional loans, larger down payment required, not available for primary residences. DSCR loans have opened the door for thousands of everyday investors to build real estate portfolios without the headaches of traditional financing. If you've been sitting on the sidelines waiting for the perfect moment, this might be your strategy. If you found this helpful, hit that like button, subscribe for more real estate content, and drop your questions in the comments below. I'll see you in the next one.